Hello, everyone. Good evening, and I welcome you to another video tutorial. In this video, we are going to be taking a technical dissection of the XAUUSD chart together with the utmost intent of identifying a potential trading opportunity ahead of the new week. And remember that this week is laced with series of high impact events and most importantly the FOMC, where we majority are speculating a 25 basis rate point hike, which might likely be affecting the dollar in one way. So we are going to be looking at it during the session here as we take a technical look at what is really going on from the higher time frame right through into a much more lower time frame where I was able to identify a simple setup that I think we can use to guide our trading activity for this week. And since this is a follow up detail to my previous analysis, I would like you to also take a look at the previous analysis on this pair as we took advantage of some trading opportunities during the course of the week. And I will be dropping the link to this commentary right in the comment section, especially for those who would like to see how we took advantage of this trading opportunity last week. And for those who are watching from my YouTube channel, definitely you will be seeing the link to this commentary at the right hand side of your screen. So we had a lot of choppy situation, but we were able to capture some key moments during the course of last week. So if you like to look at this, feel free to check the link below. So with that being said here, let's dive right into the current market structure where we shall be looking at what is really going on from an holistic point of view. And looking at this chart here, if you had been with me for quite a while now, you would have realized that we are still using the same structure that has been guiding our trading activity in the last couple of months. And from the look of things here, it is quite obvious that we have a bullish momentum here. And after connecting the series of higher highs and higher lows in this market, we have the simple ascending channel, which has emphasized the strength of the buyers in this market. But things got a little bit interesting during the course of last month's trading session as we saw price action breaking out of the 1950 level for the first time in about 2 months this year. And this was actually the first time price action will break out of the structure this year. And since then, we have seen a situation here where price action had remained above that level. And one interesting thing about this whole structure as well, despite the fact that price action had found new highs at the $2,000 mark and the $2,048.50 level, we have seen a situation where sellers had continued to negate any attempt by the buyers to break out of the resistant line of this ascending channel, giving us a clue of the indecision that is going on in this market, which has actually lasted about 4 to 7 weeks now. And look at what we have here. If I zoom into this current structure, you will see that price had remained around $2,000 mark area, which happens to be our key level in the last couple of months. Now, with this whole situation we have here, there is a psychological reason behind this whole chopper situation that we have been witnessing here. And this is more to the fact that as soon as price finds a new high, we normally experience that emotion of fear come in to incite this old choppy situation where we could see price action go into a retracement phase or a consolidation phase where majority who are taking advantage of the bullish momentum at a very cheap price will want to be selling some of their positions to make some profit of this whole situation. And this has resulted into a choppy situation that we have been noticing here in the last couple of weeks as price action had remained between the $2,000 mark and the 1,970. Now, going into the new week, our center of focus is going to be within this channel as we want to see how price action will react to the structure to determine what our next line of action will be. Are we going to be having a breakout of the channel to the upside to incite a trend continuation to the upside? Or are we going to be having a situation where price will break down the buying pressure zone here, that is the 1970, to incite a bearish move to the downside, probably to respect the support line of that ascending channel we identified earlier? So, in order to have a better perspective into what is going on here and to position ourselves in such a way that we can catch that move, we shall be scaling down into the 4 hours time frame, where I was able to find a simple setup that we can use to guide our trading activity for this week. Before we go into the details on the 4 hours time frame, I would like to share with you the fundamental aspect of the market, as it is necessary that we also keep tabs with what is happening from the economic calendar, so that this will also help us in timing ourselves in such a way that we can catch the potential move when it finally happens. So, looking at the economic calendar this week, we are going to be focusing on high impact events that will be affecting the US dollar. The first event is coming up on Monday, and that is the ISM Manufacturing PMI. And this index shows the business conditions in the US manufacturing sector. It is a significant indicator of the overall economic condition in the US economy. So, a result above 50 is always seen as positive, but anything below 50 is seen as negative for the US dollar. Now we have a previous data here at 46.3, as you can see here, and there is a consensus of 46.6. So we are going to be looking forward to the actual data on that one. Then we also have another high impact event coming up on Wednesday, May 3rd, and this is the federal interest rate decision, which everyone is looking forward to, where we've been expecting a 25 basis point rate hike. We have the Fed monetary policy statement and also the FOMC press conference. This is another event we are going to be looking forward to. And then on Friday, May 5, we have the almighty non-farm payroll, which is an event that presents the number of new jobs created during the previous month in all non-agricultural businesses. Now, if you look at the data here, we have a 2,300 and 236,000, and we have a consensus projection of 181,000. So we are going to be looking forward to the actual data here, and definitely we shall be seeing the anticipation of this event reflect on the chart as price action. So with the information we have gathered here on the daily time frame, let's scale back down into the 4 hours time frame, where I said I was able to find a simple setup that we are going to be using to guide our trading activity for this week. So this is the 4 hours time frame here. So let's zoom in. So what I did on the 4 hours time frame is to take into consideration what has been happening in this market in the last 2 to 3 weeks. And obviously, it is quite evident that price action has been bearish. As you can see, we have a high here at the $2,048.50 level, which happens to be the highest point price action has been at this year. And since then, price action had continued to find lower highs to give us this bearish trend line that you can see on your screen right now. And something interesting is happening around this area. Despite the fact that we have a lower high in this market, you can see that we are yet to see a lower low, as the $1,970 mark throughout the course of last week's trading session had been an area where buyers had tried to negate all attempt by the sellers. As you can see, every attempt by the sellers to break down the structures had been met with strong resistance from the buyers to negate that selling pressure, giving us a very beautiful demand zone that we are going to be using to guide our trading activity for this week. In addition to this demand zone, here is our key level at the 1990 level, which has been a major determinant of price action throughout the course of last week's trading session. You can see how this level was a buying niche at one point. We saw the breakdown of the structure. We saw breakdown here. We saw buying niche. We saw the breakdown, and during the later part of last week, we saw our sellers had continued to negate all attempt by the buyers to break out of that level. So you would agree with me that we are at a critical point in the market right now where the key level at the 1990 and the bearish trend line here is where price action is currently trading. So what's a very important confluence we have there, as we are going to be seeing how price action will be reacting to the structure at the early hours of the week to decide what our next line of action will be. So if price action breaks out of the 1990 at this point, this trend line here would have been breached, which is going to be a signal that we might likely be seeing a bullish momentum, as the breakout of the trend line is a signal that buyers have finally gathered the strength to breach the trend line. And if it so happens that buy pressure continues above the structure, then we look out for more opportunities to add more position, and the breakout of the $2010 mark here, which has been a level where sellers had continued to negate buying attempt during the course of last week's trading session, will be another opportunity for us to add more position to our existing trade. Now, you all know what we do whenever we have a single bias. We also want to take into consideration the opposite of the potentials of the sellers too as well. And judging from this current structure here, for us to sell the XAUUSD going into the new week, I would rather see price action take out the demand zone here at the 1970 to give me a signal that sellers are finally coming to stay. And if we scale down to our lower time frame, the appearance of selling pressure below the structure will definitely confirm the validity of this bearish move. So this is what I will be looking forward to going into the new week. But most importantly, we want to see how price action will be reacting to the structure here during the early hours of the week to decide what our next line of action will be. Trust me, I will be with you in the comment section as usual as we get prepared for the new week. I do hope this video has been of immense help in making your personal decision on the XAUUSD, and if it did, kindly support this project by clicking the like button. You might also want to follow me on my TradingView platform at Dark Sherry so that you don't miss out on the regular updates I normally share in the comment section of all of my videos. Thank you for watching this video, and I look forward to seeing you right in the comment section on Monday morning as we get prepared for the new week. Do have a wonderful evening, everyone. Bye bye.